Coinbase Wallet tutorial. Hello everyone, I welcome you back into another video, and in this video we're going to be talking about Coinbase Wallet. Okay, so Coinbase Wallet is basically an add-on or an extension that you can get on your Google Chrome. So basically you need to have an account on Coinbase. And once you do that, Coinbase is obviously your crypto exchange application, and you can download Coinbase Wallet on your iOS, Android, Brave, and even your Chrome. So it's an extension for Chrome that you can get, and I would definitely urge users out there to use this for yourself because trust me, it works absolutely incredibly. The wallet address is there. You can add it to your Chrome in the easiest way, and once you've added it, all you're going to need to do from there is just log in with your account and you're good to go. And you can basically buy crypto, send crypto. There's decentralized financing. You can also add in NFTs and, actually mint them through your Coinbase wallet. And it's a good wallet to work with. It's just like your MetaMask wallet, but I would prefer using Coinbase wallet, because just because the features are much more efficient and much more better in my opinion. So all it's going to ask you to do is either create a new wallet or, you already have a wallet. So, you're going to first copy the things in your wallet. Like say, here's the thing of your wallet. You're going to copy this and paste it somewhere else. And, you're going to go over here and you're going to click on the first and the last word. Okay. So, the first last word is mimic, last word is farm. So you're going to go to mimic and you're going to go to farm. And then you submit this. And obviously, if this is correct, they're going to tell you to create a password. So you are going to create a password real quick. And once you create a password, you're going to verify your password. And once you verify the password real quick, you're probably wondering, why is it not asking me my email or anything like that? Now, the reason for that is you don't really need an email. It's just going to give you the code, and when you're logging, it's, you can also claim stuff. So here you go. You buy, swap, bridge, send, receive, and that's your basic Coinbase wallet.
Hi guys, in today's video I'm going to show you how you can buy, trade Bitcoin on Coinbase app. You can check up the link underneath if you want to sign up for the app and use the app. Essentially guys, Bitcoin and cryptocurrencies are moving much more, sometimes tens of percentages more than the stock market. So I want you to be very careful, very risky play over here guys. It is not like the stock market. So I want you to be very cautious. First thing you want to do when you actually create your account, you want to come over, and the Coinbase app doesn't work like the stock market app. Essentially, all the assets will be over here because the Coinbase only approves coins for trading that are approved from the general public. They don't allow coins that they don't prove the sufficient backing of the funds and seriousness. Okay, so all the coins will be here in front of you when you log in the app. I didn't add these coins over here. These coins just simply appear. So the Bitcoin will simply be on top of your list. If you scroll on the side, you will have the watch list, you will have the USDC. But let's click on the Bitcoin in our example. Like I mentioned, let's say you're interested of purchasing, buying or selling Bitcoin. The app is very easy. As you can see, there is no options like we went through the stock market. All we gotta do, if you're interested, is simply after you analyze the chart, of course, click on the buy button if you're interested to buy. And over here with the recent updates of advanced trading, you will see that again we have buy limit, which is the limit price. For example, Bitcoin now is at 41 to 20. For example, you want to buy only at 41,000, right? So you're gonna set up your limit price. If you don't want to wait and if you want to buy right away, you're going to do the market price, which is the current price, which is moving, right? Which means that you don't know exactly on what price your order will be executed until you click buy, because the price is moving every single second. Then you have a stop limit, which essentially means that at this particular price that you set over here, you will be able to buy at these prices prior the price move forward. You place your bets, you put the amount. For example, want to buy one Bitcoin at the stop price of, let's say, 41,100. And when this price hit, okay, then you will be able to execute your order at these levels. Something like a limit order again. The other thing that you should consider is that trading crypto is always coming with a fee. So when you buy and sell, you're going to be charged a small fee based on the quantity of the trade and how often do you trade. This is something very important. In the Weibo example, we did not pay for the trade itself. There is no fees associated with the trading activity, but there are brokers out there who will charge you on the stock market as well. So be very mindful about this, guys. Be always very, very careful. For more tips and tricks like this, subscribe and come back for more. Hi guys, in today's video I'm going to show you how you can buy and sell Solana using Coinbase app. This is the easiest way to do so. Over here, guys, as you can see on the app itself, you do not have to go and look for the ticker symbol. All the major coins will appear on your automatic watch list. As you can see, the third option over here, we have Solana USD. You want to click on Solana itself over here and you want to make yourself aware of the chart. You want to make sure that the default settings are set in your favor, meaning as you can see over here, we have an interval of 1 hour. The question is, are you trading in 1 hour or are you trading at 15 minutes interval? Okay. Also, you want to make sure that all the indicators that you usually use are into place. When you define a well situated position for you to enter or exit, you want to click on the lower side of the equation. You want to click the buy button, and then you want to look how to place your order. Do you want to place your limit order, essentially meaning the current prices of Solana is 91.4567. So if you want to set a limit price of $91 only, you can do so. Also, you can work with percentages. You can set to buy when Solana is down 1%, or Solana is down 5 or 10%. Or you can simply work out with amount. For example, if you had deposited, let's say $1,000, you can set an allocation of a quarter of it, right? 25%, or you can allocate 50% of it, or you can allocate all of it. This is very important, guys. Be very careful. Things are moving very fast. On crypto market, the actual volatility is 10 to 20 times more than the stock market. So be aware of the risks associated with. The next option, of course, is the market order. Let's say you want to buy right now. You expect something big to happen. You don't want to wait. So the market order will execute your order on the price that is the coin at the moment you click the button. There is no guarantee what will be the price. This is the tricky part, because every single second and millisecond the prices of Solana are moving. So this means that when you click buy, you might get a shift or you might get a slippage between a couple of cents. Sometimes could be $1 depending on the pump or dump. And again, you can use the new function, which is the stop limit, which means that you set a price in which when you allocate your funds towards this particular price, the trading of the moving of the price of the coin will stop and you will be able to purchase at these levels. Even though the market fluctuation will continue, you will have the access to purchase at this price. But in my opinion, guys, most people are utilizing the limit orders simply because, like I said, market is moving so fast on the way up or on the way down. So there's a likelihood of you getting your price achieved at some point. Not a financial advice, guys. For more tips and tricks like this, subscribe and follow for more. Hi guys, in today's video I'm going to show you how you can buy Ethereum on Coinbase app. Very easy, guys, very simple. First thing you want to take a look over here is that on the Coinbase app you don't have to search for the actual tickers of the coins, okay? The main coins are always on top. Bitcoin, Ethereum, Solana, AVAX, okay? They're always on top, they're always right in front of you. So when you decide to pick up the coin that you want to buy, in our case we're looking at Ethereum, you want to click on the coin itself, Ethereum USD, okay guys, because you're buying Ethereum with US dollars. The first thing you want to take a look when you actually launch the buying landing page, you want to see over here that the trading interval should be accurate over here. You want to make sure that you are set at the trading interval you usually trade on. The default setting is always 1 hour. I don't know why it's like that, but you can set your own time frame that you usually trade or usually at least look at the charts online. This will give you an indication of the most recent or the further away price action. Then you want to go ahead and scroll to the bottom and decide we want to buy or you want to sell. Let's click the buy button and let's take a look what we should do next. The first consideration over here is the type of the order do you want to proceed with. For example, we have a limit order. This means that you're most likely going to be looking to purchase the Ethereum below the current prices. If Ethereum currently is trading at 2200, right, you might be putting your buy order for 2150, 180, something like this. Not a financial advice. Then the second option will be the market order, which means that you don't want to wait. You expect a big price swing coming, so you think that it will not go lower, so you want to buy right now. The market order, you don't know exactly what will be the price in which your order will be executed until the order is already executed, because every single millisecond the prices, as you can see, is moving. So the moment you click buy, it will take a couple of seconds to get fulfilled, and then you're gonna see the actual confirmation, and then you're gonna see what is the price of your order. This is usually not recommended simply because you're not getting the best prices, but if this is not any of your concern, you might proceed with this as well. And the last option is the new function, which means that you set a price, you set an amount of your money, your portfolio cash that you want to allocate, and when this price hits, right, even though the coin will continue to move up or down, you will be able to log in and simply buy at these prices that you put the stop. It's very, very interesting function. I haven't used it personally, but I think it might have some use case. Again, guys, at the end of the day, you need to remember that trading cryptocurrency, it is always risky, and it is always in consideration with particular fees. This is not the stock market where you can trade for free. Here, if you place a buy order for $100 of Ethereum, you're not gonna get $100 worth of Ethereum. You're gonna get Ethereum, and then you're gonna pay a small fee for the transaction. Please always be mindful and pay very close attention to the details before you buy or sell cryptocurrency. For more tips and tricks like this, guys, subscribe and come back for more. Hi guys, in today's video I'm going to show you how you can buy or trade Cardano ADA. Okay, very important is that we're going to use the Coinbase app over here. What I like about Coinbase is that you don't have to actually go on the search bar. All the main coins are right in front of you as the main coins that you should follow and look. Let's go on Cardano USD over here, because we're going to use the US dollar to trade or to purchase Cardano. First thing I want you to pay very close attention when you're using your phone is that there is a default setting on Coinbase app, which is the interval. As you can see over here, it is always 1 hour. So if you are interested in trading in lower time frame, which is the most used 15 minutes, or you might use a different one, simply want to make sure that you check your settings before you proceed with any purchases. The second thing that I want to highlight over here is that you want to make sure that you have all your usual indicators essentially enabled, so you will be able to make the best decision possible. Prices are moving more during these days simply because the volatility has increased since the year began, so you want to pay close attention to all these numbers. Without losing additional time, let's click on the lower left side of the screen, click the buy button, and let's see what are the options and choices that we should make if we want to buy Cardano. So there are 3 different types of orders you can actually place. There's limit order. Essentially, current price of Cardano is 48 cents. Let's say you want to place a limit order which is lower than the current prices. Let's say you want to buy Cardano when it hits 45 cents, right? You want to place your bet over here, and you want to place the amount. Another way to approach the same exact trade will be simply to select, if Cardano is down 5%, buy X amount of my portfolio into Cardano. If you look down, you will see that there is a similar allocation types with the amount of money. if you had 1000 US dollars in your portfolio, and you can simply decide to allocate a percentage of this 25, 50, or 75%. This essentially means that when Cardano falls X%, you're gonna buy Y amount of your portfolio. Very, very interesting. I haven't utilized this function simply because I'm trading with a very small margins, meaning that I'm really looking into particular prices, which if you just use the percentage being down or up, or using percentage allocated from your portfolio, is not as accurate as I want it to be. The second type of order will be, of course, the market order, meaning if you expect, very strong price action, if you expect to not go lower, to not be able to buy at the lower prices, you're gonna place a market order. The main downside over here, of course, will be that you're not gonna know what will be your cost basis until the order is actually fulfilled, meaning the prices are moving every millisecond. So when you click buy, there are a couple of seconds to get your order confirmed and another couple of seconds to get your order fulfilled. So between this seconds time frame, you're gonna get Cardano moving up or down. So it will take time for you to see what is your cost basis and how much did you actually paid for your position. The stop limit is the new function, which essentially means I'm gonna put Cardano to go to buy, let's say, X amount of Cardano at prices, let's say when it hits 46 cents. And even though Cardano will keep moving up or down, but I will be able to purchase at this 46 cents with the stop limit buy. Okay. Be very mindful, guys. This is not a financial advice. Always be aware that the volatility on the crypto market is 10 to 20x, if not more in some situations, than the stock market. Also, remember that there is a small fee associated with each and every transaction, not only on Coinbase, but in any crypto exchange. So be careful and always pay attention to the numbers. For more tips and tricks like this, guys, subscribe and come back for more. Hi guys, in today's video I'm going to show you how you can buy AVAX coin using the Coinbase app. As you can see over here, what I really like about Coinbase is that you don't have to go and look for the coins. All the major coins are right in front of your list. On the top is Bitcoin, then Ethereum, then Solana, and then we have the AVAX coin. First thing you want to check over here is your indicator working appropriately and what is the interval that is preset as a default on Coinbase. For example, we have a 1 hour interval. Is that the interval you want to trade, or you make your decisions on? You want to be very careful over here, okay guys? Because there is a difference between using the mobile app and using the desktop version. When you're ready and identified an opportunity to enter or exit the position, all you gotta do is to go on the lower left corner and click on the buy button. Over here you will have 3 different ways to go about buying AVAX coin. You can go and simply set a limit order. You can go and simply set a market order, or simply set the stop limit. As you can see today, AVAX is up 6, almost 7%, and this is what I really like about crypto market. It really moves very, very fast. But be very cautious, guys. Things might go south very fast. There are 10 to 20x volatility more than the stock market. I did make quite tutorials about the stock market in comparison. So over here, guys, let's focus on the actual buying process. So for example, currently the price of AVAX is $32.20, fluctuating, right? If you set the limit price, you most likely want to buy it cheaper. Considering that this could be at as low as we saw over here, could be at 31.50, 31.80, you can set your price, right? Or you can work simply with percentages underneath. As you can see, buy when AVAX falls 1%, or falls 5%, or falls 10%. The other option you can work around is with the actual dollar amount. So if you had your portfolio with $1,000 and there is a percentages which you could allocate with this. For example, if the AVAX fails 5%, you want to allocate 50% or 20% or 25%, right, of your portfolio. This is how you could, see the allocation or the diversification of your portfolio probably in better way, just percentage wise. For example, you have a quarter of your portfolio in this and that, so you know exactly how good or how bad your portfolio is doing. Again, I'm gonna remind you people that trading crypto is always associated with fees. Don't forget that if you buy $100 worth of any crypto, you're not gonna get $100 worth of this crypto. You're gonna get charged a small fee depending on the volume, depending on the how often do you trade, and this is something that you want to bear in mind. For more tips and tricks like this, guys, subscribe and come back for more. Hi guys, in today's video we're going to go over how you can do a crypto arbitrage. This is a very interesting opportunity. A lot of people have been focusing on this, and in this video, guys, I'm gonna walk you through alongside Bart AI. So you will learn the basics and you can make your own decision. Is it something for you or probably it is not? So let's start from the basics. First thing, you wanna identify price discrepancies. Essentially, this means that if you see something that is overvalued or undervalued, you probably want to take a position with or against. You need to use tools or platforms to compare prices of the same cryptocurrencies across multiple exchanges. For example, sometimes the price might be 1 at exchange 1 and different in exchange 2. If you are able to execute your trade on exchange 1 and sell it on the exchange 2, this could simply mean that there is a chance for you to make an arbitrage play trade. The second thing is that you want to look for significant differences that present profit opportunities. For example, early in the days of Bitcoin, in some exchanges, Bitcoin was trading around 12,000, while on the bigger exchanges, it couldn't be found for under 15,000. So this is discrepancy of around $2,000-$3,000 depending on the moment. Right? And certain people took advantage of this. The second thing, after you identify the exchanges, the opportunities, and the price discrepancies, you want to focus on act swiftly, meaning that the crypto markets move very, very fast, so time is crucial. You want to make sure that you have the capability to execute trades almost simultaneously. Okay, so you will be able to capitalize on the price differences. Otherwise, if you think too much, or otherwise if your internet is not so good, or the connection or the actual broker is not reliable, you're not going to be able, and you're not going to only miss potentially the opportunity, but you might actually lose money. The third step is to focus on the common types of trades. So there are a couple of different types of arbitrage. We're going to focus on 3 of them. The first one is exchange arbitrage. This means that you buy on the lower price exchange and sell on the higher price exchange, something that I gave an example earlier. The second example is the triangular arbitrage, which essentially means you exploit price differences between 3 different cryptocurrencies. This is something a little more complicated for advanced traders, I would think so. The third option is the cross-border arbitrage, which means that you're taking advantage of price variations across exchanges in different countries. For example, in Asia, Singapore, the price of Bitcoin could be 1, and in the US could be different. And whatever price makes more sense for you, you can essentially try to play the arbitrage deal, buy low and sell high. Not a financial advice. The next step, of course, is to consider tools and automation. Manual arbitrage can be challenging due to the speed requirements, and you have to stay in front of the screen all the time. You simply cannot leave the trading desk. Many traders use specialized software of bots to automate the process, but again, this is another level. You're still a beginner. Just letting you know that this is something that exists, and this is something that some of them actually uses. Essential factors that determine are you going to be making money or you're going to be losing money, aside from your skills, of course. So first of all, the fees. You want to make sure that the exchange fees are reasonable and the withdrawal fees are not significant, because otherwise, if you're day trading and every time you have to pay fees for the actual conversion, then doesn't make sense for you probably using it. Then you want to make sure that the exchanges allow you to transfer at any time, any amounts. There's no restrictions, there's no issues with it. You also be aware of the risks, right? Arbitrage involves crazy risks due to the very high volatility of the cryptocurrency and the market overall. There could be technical glitches sometimes, and potential losses referring towards the glitches. Nothing is perfect. There is no system that couldn't get hacked or blocked. Just a couple of days ago, we heard that there was a major hack in XRP and over $100 million were stolen. So understand how this actually works. The last thing, of course, is legality. You want to make sure that you follow the regulations and the restrictions of the area that you actually live in, and everything is good and cool, and the exchange you're using actually has license to offer these services. So essentially, guys, this is it. You always want to make sure you learn more than other people. You spend more time researching than more time trading, because the core concepts are always knowing more, being ready for more, and essentially having greater opportunity in vast majority of chances to utilize these price discrepancies. For more videos like this, guys, subscribe and like this video. Hi guys, in this another tutorial video we're gonna break down even more in depth what is Bitcoin ETF and why people are so excited about it. First thing, let's cover the basics and let's go back where everything's began. Okay, first of all, spot Bitcoin ETF essentially collects investors' money to purchase Bitcoin directly. Then the Bitcoin ETF is managed by an investment firm. Whoever firm create its own product, own ETF, and offer this ETF to the clients. So this is very important because for a lot of people, buying cryptocurrencies, learning about cryptocurrencies, it's a hard task. They're not excited about, it's complicated, blockchain, which crypto is real, which crypto isn't, right? So this is essentially for people that just want a little exposure, a little gamble on the side. While it's very common knowledge what was Bitcoin and created for the more or better part of the last 15 years, most people didn't take it seriously. Most people expected Bitcoin to go away and to be just another fraud. But essentially, with this current approval from the government and allowance to be offered on the exchanges through the ETF, it's a major step. So big investors who usually buy gold, buy commodities, invest in different startups. This is just simple different way to diversify their portfolio and to get exposure on the markets. Very important. Trading directly through the crypto exchanges for some people could be complicated, and you should have a Coinbase account. Then if you want to store your crypto, you should probably create a Coinbase Wallet, so you will take your custody into your full control. Then if you want to take stuff even further, you can take the crypto on your cold storage. So all these steps are pretty, if not complicated, I would say pretty annoying and deeming, right? So this is why big investors essentially are creating a pool of not only Bitcoin, but in a case with Bitcoin futures, they're comprising different crypto assets under Bitcoin ETF futures contracts. So essentially the volatility over there will be even greater. Investors now will be available to benefit from the added protections on the ETF structure and get Bitcoin exposure as part of a diversified portfolio with less volatility, something that I mentioned earlier. Very important is that people who usually will be investing most likely not going to be the little guy. It's not going to be me and you. Investing in Bitcoin ETF could be a good option for people who are looking for more traditional way of investing, right? Don't forget that all these funds will be charging you a fee, which media already speculates will be higher than the fees that you will be paying, for example, on Coinbase to buy or trade crypto. The ETF structure could also make it easier for some institutional investors to enter to the crypto market, which now we can speculate that a lot of these retirement funds, pension funds will be having board meetings, and they will be suggesting or offering to their clients, to allocate a small portion of the fund towards crypto. I bet this will happen very soon. But don't forget that still crypto is one of the highest, if not the highest risk possible simply because the speculation and the lack of true regulation, right? SEC it's not in charge of the crypto market. SEC is in charge only of the stock market, of the securities market. So the lack of actual clear regulation has put a big shadow on the crypto market. And you probably wonder, but if that's all the case, why would you even considering buying the Bitcoin ETF? Well, they will make it easier for you simply because they are going to offer you these 3 ETFs through the brokers. So they know exactly which brokers you're using, right? So you expect the most popular brokers such as, let's say, Webull, Robinhood, Fidelity, Schwab. They know exactly which brokers you're using. So they're going to target these brokers and they're going to offer you their ETF through these brokers. It's like, it will be similar as you buying the S&P 500, right? ETF from the different providers and different funds. Bitcoin ETFs are available through most brokers who offer traditional securities. Some of the brokers may also offer opportunity to invest in Bitcoin directly, which in my opinion is something that most people want to consider. ETFs trade on traditional exchanges such as New York Stock Exchange, Nasdaq, and earlier I mentioned that the futures are trading on Chicago Mercantile as well. If you're interested in why this offering cryptocurrency, you can go directly and invest into digital coins, something that we already talked about. As you can see over here, now we can go through the cost of buying these ETFs. Something known as the expense ratio, which means how much these people will charge you if you buy into their ETF. Okay, so I have the chart over here, expense ratios, variations. You see, some of them will be charging you up to, you see, 1.5% grayscale Bitcoin trust. So this is the one where a lot of outflows happen. This is, according to a lot of people from the industry, main reason for the slide in Bitcoin price for the last 2 weeks. As you can see, they're charging you 1.5% expense ratio. This is why a lot of people will be selling off, or they simply want to be allocating from this particular ETF to some other ETF, because you can see you can get the same service, or okay, let's say similar service for a fraction of the cost. You can get it for like 20 cents, right? 0.20%, right? 25%, right? 20, 29, 39, 49, 25, still much cheaper. I would say 3-4 times cheaper than what people used to pay on Grayscale Bitcoin Trust. So now you guys understand that if the big guys, the smart money, are counting their cents by simply choosing a provider offering the same, if not similar service, right, for a better cost expense ratio, well, maybe you should consider this as well. For more tips and tricks like this, guys, subscribe and follow for more. Hi guys, in this video we're going to talk about what is Bitcoin ETF and what are the current Bitcoin ETFs available on the market, why people will be interested to invest in some of these, and what are the benefits out of it. Okay, first thing first, how to invest in Bitcoin futures ETF. If you're looking to invest in Bitcoin futures ETF, you can purchase them through your broker or advisor if they currently offer them. Very important, there are several Bitcoin futures ETF that trade on the exchanges, such as the New York Stock Exchange, Arca, and Nasdaq. If you can look over down, we have ProShares Bitcoin ETF, we have Valkyrie Bitcoin ETF, we have VanEck Bitcoin Strategy ETF, Global X Blockchain and Bitcoin Strategy ETF. These are also Bitcoin futures ETFs that have investors short on cryptocurrency such as ProShares Short Bitcoin. Essentially, looking at the price action today, Bitcoin, I presume a lot of people are going short. Considering that the sell-offs are not over, if you watch my previous videos covering the recent sell-offs and the lower price action of Bitcoin, a lot of people didn't actually cash out, and a lot of these major institutional investors have the capabilities to realize a lot of the profits that they previously didn't. It is really important to know that these ETFs are not entirely comprised by Bitcoin futures. For the most part, they invest in traditional securities that are holding Bitcoin future contracts. So for example, ProShares Bitcoin Strategy Fund is designed to hold Bitcoin future contracts only when positions are profitable. In other words, if the positions are negative, like potentially at this moment are, simply because Bitcoin has been down 15% for the last 2 weeks or so, they simply will not hold the actual futures. They could hold securities of Bitcoin related companies and money market instruments, so essentially they will hedge the potential downside. They can also use these particular futures to borrow against using the reverse purchase agreements. In other words, they're trying to make Bitcoin derivatives, which is any financial instrument that derives out of Bitcoin. It could be future contracts, right? Simply a valuable instrument on the market that you can use as a collateral. So essentially you could borrow out of it, right? What is the difference between Bitcoin futures ETF and Bitcoin ETF? A futures Bitcoin ETF, it's aiming to track the price changes of Bitcoin, but it's not mimicking exactly the price action. It's not as the usual normal Bitcoin ETF, which holds Bitcoin, trades Bitcoin, and the value of it is consistently persist of Bitcoin itself. It's a very, very big contrast. And you need to understand that the volatility and the risks associated with both types of ETFs, it's very different. There is higher volatility on the future side. Remember, the speculations of the futures are always greater simply because there is a particular date in which these contracts will get executed, right? These contracts will lose their value. So this is very important. This limitation is creating a pressure around the particular market participants. This is why you read that they only invest or comprised the value of it when the actual market is up. When the market is down, the funds does not offer the futures of Bitcoin. This is a very big red flag, or at least something that you should be alarmed for, because this simply means that the market is not what it used to be. It's not what it looks like. For more tips and tricks like this, guys, subscribe and follow for more. Hi guys, in today's video we're going to go over what is Bitcoin ETF and why the public is so excited about it, why this is a big step for the crypto in general, and why a lot of institutional investors have changed their thesis. In the beginning they didn't like crypto, now they love it. So first of all, what is Bitcoin futures ETF? Why this is something big? So Bitcoin futures exchange traded funds are pools of Bitcoin related assets offered to traditional exchanges by brokers. Essentially, guys, they don't want you to buy the Bitcoin itself. They want you to buy their ETF, which is the actual paper. It's like when you go and buy S&P 500 index funds, right? You buy ETFs that are related to the index fund. You don't buy the Tesla or the other individual companies inside S&P. You just buy the ETF itself. The intent behind these particular ETFs is to give retail and other investors exposure to the cryptocurrencies without needing to own them. You understand how it works, right? Which is one of the biggest downsides for people who usually buy on the exchanges crypto, right? Because it's not self-custody. This is why a lot of people have been buying crypto through their own wallets. Key takeaways over here, guys. So Bitcoin futures ETFs are exchange traded funds that aim to mimic the price movement of Bitcoin. So the ETF has its own price that is related in some sense to Bitcoin price, simply because it is not pure Bitcoin. It is a pool of cryptocurrencies inside this ETF, and this is why the price of Bitcoin is not one-to-one with the same ETF product, okay? This is why when we had the rally in the beginning of this year in S&P 500, when you go through Vanguard or Fidelity different ETFs, each one perform differently, because generally they do have like 80% same stocks inside, but the 5, 6, 7 different stocks that are in between are making the big difference in the performance overall. Also, going back over here, guys, you will see that the ETFs use future contracts to achieve the goal. So it's not stock, right? You're essentially betting on the future contracts for the future prices. Also, guys, you want to see over here that the fund managers purchase these contracts and bundle them into a fund. This is why BlackRock has to have a custodian, right? Has to have someone to hold their Bitcoin when they actually offer their ETF to the clients. So this is how it works. So BlackRock buys, let's say, $1 billion worth of Bitcoin, for example. They have to put this Bitcoin somewhere, right? They put it into Coinbase, for example. Then they create this pool of different crypto products, right? Not only Bitcoin, different crypto products, and everything is linked to the value of the BlackRock ETF. Then they go to the clients and send a, let's say, offer or make a presentation, and they incentivize them to buy into the ETF. So they could be for a variety of reasons, diversification, speculation. These funds gained popularity in part due to the SEC blocking the creation of ETF that directly hold Bitcoin. So this is why they cannot actually hold their Bitcoin. This is why they need a custodian. This is what I mentioned earlier with Coinbase example. Let's understand what is the reason why people would want to buy the Bitcoin futures ETF versus buying the actual Bitcoin, right? What is the motivation behind? So the actual futures through the ETF composed of assets related to Bitcoin price. They're traded on traditional exchanges instead of the cryptocurrency exchanges. So essentially you can go buy probably on New York Stock Exchange or on Nasdaq instead of going on the Coinbase. And this is what they want, right? They want to keep you on the strictly regulated exchange where things are under the control of the SEC, because SEC does not have overhaul on crypto. They do have on the stock market. And when a product like this is traded on the stock market or on the futures market, it still falls under the regulations of the SEC. Currently, the underlying asset with Bitcoin futures ETF. Okay, so these are traded on Chicago Mercantile Exchange. A futures contract is a standardized contract where two parties agree to exchange a specific quantity of assets on a specific day for a specific price. You understand how the futures work, I presume. So let's say, for example, I buy a futures contract for Bitcoin price Christmas 2024 with the price of, let's say, 100,000, right? The idea over here is that you pay a premium for this contract, but essentially you're betting over there when you buy the contract, right? Somebody at this point, if the prices of the Bitcoin are actually above the 100, let's say it's 150,000, you still have the future contract that you are able to exercise, and you're able to buy the Bitcoin if you really want to do that at 100,000. And the person who sold the contract to you, they have to buy on the open market, and they have to sell to you at 100,000 below market. So this is the risk associated with selling contracts, right? And there is a risk associated with buying. Of course, it might be lower. Just think about Christmas and Bitcoin is still at 50,000, but you have a contract with 100,000. So essentially, you lost a lot. So guys, the main idea over here, as you can see, is that all the big boys on Wall Street haven't been participating in the selling of the crypto. They just have been looking on the sideways, probably trading these major sell-offs that we've seen from time to time. But now they understand that the big money and the less risk is obviously to create a product related to crypto and sell this product to the customers. This is why. Nothing special over here, guys. You're not holding, you're not buying the actual crypto, you're just buying a paper, a future contract, right, that is related to a pool of cryptocurrencies. Nothing excited, in my opinion, not a financial advice, guys. You gotta be very careful what you're doing, okay? For more tips and tricks like this, subscribe and watch for more. Hi guys, in this video we're gonna go through the recent news and why Bitcoin is continuing to sliding. More analysis over here is coming from a lot of people from Wall Street that they priced in particular inflows or outflows. As you can see over here, even the stocks that are related to crypto, Coinbase, MicroStrategy are suffering. But let's go over the details. So first of all, people are saying that there is still a correction mode in the ETF simply because there are ETFs that are not approved versus the ETFs that are approved. According to them, we're still in a correction post ETF launch. They're saying that a lot of the traders who are trading with billions of dollars, short-term traders and large Bitcoin holders are still doing significant selling in the context of risk-off attitude. Essentially, these people are the one creating a major selling pressure on the market. Not only the people that I covered in the other video from Grayscale Trust that simply are either cashing out or shifting towards different ETF. The main scoop over here is that these short-term traders are feared that the price might go lower. So if they're sitting on profits, they're going to cash out. They're going to take the profits. They're saying that additionally, unrealized profit margins have not fallen enough for sellers to be exhausted, meaning that they could continue to sell, right, and make a profit and cashing out on green until they hit a particular level, and this level hasn't been hit yet. If you scroll down, he's talking about unrealized profit of a short-term holder has fallen to about 16% this week from 48%. So just think about people were sitting prior to Bitcoin approval on around 50% unrealized profit, meaning that they're in green, but they're not selling. And what happened after the ETF approval? The current sitting on green unrealized profits are only 16%, which is mind-blowing. So obviously, this like 30+% have been only waiting for the approval to cash out, which is very, very sketchy. The guy said that the first, sign that you want to look into trying to identify the bottom of the market is that you want to see this number to fall below 0%. And this could simply mean officially bottom in the price of Bitcoin, according to him. Furthermore, Bitcoin flows to derivative exchanges have stopped. So this is weird. He said that a trend that has previously signaled bear markets or price corrections. So again, when there is a fear dominance versus greed, of course they will be sitting on the sides, right? But no one expected for them to take profits. If it was like a regular sell-off, if Bitcoin was consolidated at 40,000, right, didn't jump to 49,000. If it was just consolidated 40,000 and then dropped to 39,000, they wouldn't be selling. The main selling pressure here came from the rip. It didn't came from the dip, meaning that people sold on the way up, they didn't sell on the way down. So this is what actually created this cascaded sell-offs and blow off top. It went up 49,000 plus and then all the way down to 40,000. So this is the main reason over here, guys. Of course, considerable the allocation of the funds and the Bitcoins from Grayscale towards other ETFs, and speculators also say that some of the people from Grayscale just simply cash out, like we saw over here, unrealized profits. Considering that these people enter this trust in 2017, which the prices of Bitcoin were much lower. So you understand how these people have been waiting 7 years, right, to cash out. For more tips and tricks like this, guys, subscribe and follow for more. Hi guys, in this video we're gonna go through the recent news and try to understand why Bitcoin has been going down for the last couple of weeks. Very interesting, especially considering that one of the biggest crypto news plus regulatory body was just approved as the new ETF. As you can see over here, we have a lot of interesting coverage from Financial Times. They're highlighting something that a lot of people heard, but probably not so familiar in depth. If you look at over here, one of the main reasons why Bitcoin has been going down lower and lower, breaking a lot of levels of support, is that the Grayscale Bitcoin Trust that was previously listed as a global warehouse essentially led a lot of the first backers, the people who previously bought Bitcoin through the trust, now to be able to redeem this Bitcoin, right? If you look at over here, GBTC, which is the Grayscale Bitcoin Trust, had operating since 2017. The reason for this particular sell-offs is that last week this Grayscale Bitcoin Trust converted to an ETF, giving the backers, the original investors, their first opportunity to reclaim the $28 billion of Bitcoin that they previously collected. And in 4 days after this switch to ETF and the ETF approval, Grayscale Bitcoin Trust saw redemptions totaled more than $1.6 billion. So essentially these people are selling their Bitcoin on the open market and they are going to buy some other cheaper ETFs, because having the Bitcoin in the trust prior, it cost them a lot of money, fees, and this is one of the major reasons. If you look at over here, this has been happening in the past, so a lot of people that are more familiar with the matter knew exactly what is going to happen. It's been industry practice to assume that all the coins previously trapped in GBTC are being reallocated to a cheaper ETFs, meaning at launch net inflows falls to 1.4 billion. But fund reallocation shouldn't move to Bitcoin price. There is no net selling pressure according to them. But what we saw is crazy. So Bitcoin dropped from 49,000 at highs at the actual ETF approval from the SEC, right? Down to 40,000, even below 40,000 at some point. Also, they're saying that it is also possible, however, some GBTC shareholders just want to cash out. So again, they're putting the possibility, something that a lot of people on Twitter, I saw reports that essentially are saying that Bitcoin is going down because some of the people are actually selling off their Bitcoin because this is the first opportunity they haven't got from 2017. This is clearly 7 years. And now they might be looking to, have a lower entry price, lower cost basis, and probably purchase cheaper ETF with a lower maintenance and cost basis. If you look at over here as well, it looks like the GBTC investors who over the past year had been buying GBTC fund at a significant discount to NAV to position for its eventual ETF conversion have been taking full profit. You see? Like I said, people who are long gone, people who are, being aware of the trust since 2017, they knew exactly how this will work. When they see Bitcoin ETF approval, they knew that this will go down and they have to either, convert, they have to leave the current trust to find a cheaper alternative, or they could simply cash out if they expect Bitcoin to go, down big time. We had previously estimated that up to $3 billion had been invested into GBTC in the secondary market during 2023, which is it's a large sum of money, guys. If a previous $3 billion estimates proves correct, and given the $1.5 billion has exited already, then there could be an additional $1.5 billion still to exit to the Bitcoin space via profit taking. So the sales might not be over, guys. Essentially, they're trying to say that, they're not going to be a single dollar left. It's either going to get converted, right, to the ETF, but this is less likely simply because, like they're pointing out, people are not interested paying high fees. There will be plenty of Bitcoin ETFs out there, so if you can get the same product, right, for a cheaper price, why wouldn't you do that? Considering that there are people here invested millions, if not billions of dollars. But this is the reason why we've seen this very, very strong selling pressure on Bitcoin for the last couple of weeks. For more tips and tricks like this, guys, subscribe and follow for more.